I'm John Kaiser at the Metals Investor Forum in Toronto, February 27, 2026. I am here with CEO Peter Ma and Exploration Head Jason Dunning. Welcome to Toronto.
Thank you, John.
So last year, you redid the economic study, of which there's been many, for the SMG deposit in central British Columbia. You downgraded it to the lower confidence PEA. The market was not thrilled that the grade came out at 0.46 grams per ton. But when I talked to you here a year ago, you guys were working on something, dealing with a problem. That problem was local stakeholders were not particularly pleased with the original configuration. What did you do differently, and how are local stakeholders looking at this project going forward?
Yeah, great question, John. I think we've been working really hard with our relationships with the local stakeholders, building support and shared benefits in the region, and really localizing and regionalizing all the work we do. One of the biggest challenges for this project was the tailings and water management that was proposed in 2021 in the pre-feasibility. In that business case, there was a traditional tailings in the valley located and slurry tailings disposal. That area of where it was proposed was over top of Cedar Creek, which is Chinook spawning water, Chinook salmon, and trout, and a number of other sensitivities around that area, being Quesnel being a cabin country, if you will. Some folks have property right on the lake, live year-round. So there's a lot of concerns about the impact of the waterways, the fish, and what had happened across the Quesnel with Mount Polley and the cleanup work that they've done there. But the community still had a lot of concerns about that. So we embarked on looking at a new tailings approach, locating it up in a plateau area, in a flat area, but it wasn't really economic to create a ring dike of traditional tailings around it. So we started looking at what alternative technologies are there. We saw right away there was a potential opportunity to implement dry stack tailings. And it was kind of an interesting way we got there, in that we weren't really looking at dry stack originally. We were looking at metallurgical recoveries and putting more throughput through the mill and getting more gold production with coarse particle flotation. And one of the big hurdles with dry stack is the operating and capex cost gets really high. But when you couple that with coarse particle flotation, much of the component of the tails that come out are clean, obviously, after flotation, but of course they're product size that can wet screen and place like a dry stack. So when we saw that, we saw what I used to refer to as the springboard, or the enabling technology of coarse particle flotation, coarser particles being dry screened, wet screened, and then dry stacked, and only a smaller portion being filter pressed in the capex, opex cost. So that then became the new proposal, and an integrated water, waste, tails management system you see in the new PEA footprint. And when I presented that to the communities, we had gotten their feedback before doing the rework, and then tried to build in as much of their feedback and the benefits through the consultations that have been done in the past into the new plan.
Okay, so when I first encountered this project, it was in the 90s. It was treated as a high-grade system. And then in the 2000s, when Sky Gold and Wild Rose took it on, it was rethought as a sediment-hosted disseminated gold system drilled on a grid of vertical holes, and it became this bulk tonnage deposit, which you basically did the PEA on back in July of last year. But the grade was dropped lower than what was going on before. Why did the grade drop, and what are you seeing within the system, and this may be a Jason question, that you think you'll be able to bring that grade back up when you do an updated resource later this year?
Yeah, I'll give a high level and then pass the baton to Jason before I get out of my lane. I would argue is maybe misunderstood. I think the high grade was always there, and that earlier time when you were involved, there was the high grade, and we actually went back to that when we relogged and looked at what everybody did, and tried to take the best of everybody's interpretation and bring it forward. So the short answer is we have a lot of high grade structures that come, and I'll let Jason explain why that's there within this disseminated sediment vein. So both mineralizations are present, and we're drilling the high grade now. And I think that's the focus came off of the high grade for whatever reason into the previous work, and we're bringing that focus back. We have over 45, 50 holes now in the Orca fault area and hitting high grade. But Jason's and the team with Jason are the brains behind the operation. I'll pass the torch there.
John, it's a great area to discuss because in the winter 2025, there were 2 holes that were proof of concept that proved that if you drill at the correct orientation and at the right dip, you hit the veins at just the right angle to get maximum value for input into any future resource. Move forward to September when we're in receipt of the financing. We created a program to follow up on that proof of concept. There's 45 holes completed in the Orca trend, 2 in progress, and 5 that were done on an exploration target down by our future mill and process plant. But for those Orca trend targets, we kept that preferred orientation. And if you look at all of the holes that have come out, those 45 and hopefully those 2 in progress, you'll see that that preferred orientation probably on a very high percentage of the time is producing gold grades, 30 to 60% better than the average grade of the mineral resource, which was, as you pointed out, 0.44 grams per ton. But it's now not uncommon to see 0.7 and above, or a very wide, like in our last release, of 0.58 over 205 meters, and then subsets of tens and tens and tens of meters of 0.7, even up to a gram. This has become because we are now actually drilling this deposit the way it is supposed to be drilled. So everyone goes, well, it's infill. Well, it's not just infill. We're hunting within a model that is great for a large, low-grade deposit. But if you want to add value in those first 5 and 10 years into the model in those near-surface environments, we have to drill it at the right orientation. So working with the team, working with a great group in the field, we've now got this down to, I wouldn't say a science, but we've now got it into a methodical patterning. We're taking our time, we're systematically working our way through, and we're chasing and hunting that higher grade material. And again, the results in our news releases show that it's working. Mm-hmm. So we know that the inputs going into a resource, maybe not in the short term, will have a big bounce. I think long term, when you aggregate it over the deposit, that's when we'll see the full tail.
Okay. So if I understand correctly, this could significantly help the grade in the early 5 years, which is of course good for payback, but it won't necessarily affect that grade value that you have in years 6 to 10, for which you're now proposing the Phoenix deposit, which is to the west in a different style, as a solution. Can you explain better how you plan to use Phoenix to help fill that grade valley?
Yeah, the drilling that Jason's talking about actually targets the 10 years. So that
the whole area.
So
okay.
Some of it overlaps in the 5 years,
part.
but some of it overlaps into the 6 to 10-year window. So around a depth of 200, 250 meters. Yeah. So we're purposefully targeting this one area of the pit. There are other targets within the pit, which would drop the strip ratios as well. Mm-hmm. So improving the grade and strip ratio. And then Phoenix is also one of the upsides in solution. It's not in the PEA. We put 14 holes in it last year, pit constrained, pulled the pit 357,000 ounces, around 0.4, 0.45. With Phoenix, what we saw there is really high grade structures, quartz and sulfides. And so we thought right away, could we ore sort that and double the grade up like in a Cisco development and maybe change the sequence and move that into the first 10 years, as you mentioned. So both are correct. We're tackling our dip in grade in years 6 to 10 with high grade drilling and ore sorting, and now adding Phoenix, which is early days for Phoenix. It could have the size. It's drill indicated in dimensions that are similar to the main deposit. So it's really early days there, how big that could be.
And the Phoenix has do you understand the grade controls within that so that whatever drilling has been done properly catches the distribution of the gold, such as you're now fixing with the main deposit?
We saw, so there's a Evelyn's fault. It's another north-south fault. So we know these north-south striking faults are part of the controls intersecting the south fault, which is a northwest trending fault. Then we have these northeast structures like Orca. The interesting thing about Phoenix, it had all those and a flat quartz structure, which we hadn't seen that abundance. So there's something more going on in Phoenix. I think it's early days, but
It is early days.
again, I'll pass the baton before I get out of my lane here.
So Phoenix could also have an understated grade?
It could, and I think this is where the learnings were coming out of main deposits through the Orca trend. Once we get back into Phoenix, we'll have to work up that same secret sauce recipe, preferred orientation, because again, it is in a different host rock and in a different structural domain. So we'll have a little bit of learning off the front end of the drilling programs. But I believe once we understand it the way we do work a trend now, we think we'll be able to move in a patterning in that methodical manner that will add significant value to Phoenix.
So tighter spacing, 25, 35 meters we're doing in the Orca, maybe similar over there, sampling down to the vein width and understanding those controls and where the gold is associated with what structures and indicator minerals, and split tube. Those have been some of the secret sauces, and oriented core, you put that in there. That's really helped us understand controls more. But yeah, lots to learn at Phoenix, and I think beyond, there's a 12-kilometer package of rocks, all these learnings in that 2x3 package with Phoenix in the main zone, we think carries on for 12 kilometers on our prospective package of rocks.
Now gold's not really a critical metal, but in your milestone timeline slide, I see that you're doing a study on recovering rutile, which is the higher grade titanium oxide mineral as a byproduct. What's this all about? Is this potentially meaningful from an economic perspective, or more from a let's get this permitted perspective?
I think it's both. We really weren't anticipating, rutile and titanium, quite frankly, when we started this whole re-envisioning process. But looking at all the multi-element analysis that we had, we saw we had elevated amounts of rutile. We did an endowment model in Leapfrog with our independent QP. We started looking at the mineralogy and how we might be able to beneficiate it and recover it in the process plant. And so what we saw is rutile down to a common size of 80 microns. And we're thinking there are 4 ways we may be able to win this metal as a byproduct or even co-product. We're not sure yet. And it can report to gravity, flotation, electrostatic, and gravity on the back end spirals before water treatment and dewatering for tails. So in Africa, a lot of the rutile operations are placer, and they just run it through a spiral, low cost. So the way we envisioned this mine was see if we could bolt that opportunity on. So that's the economic side, and we'll see how big the size of the prize is. On the permitting side and social license, it has amazing benefits as well to move the project forward. It's a critical mineral in Canada. It helps with the First Nations and local communities getting support to advance the project. So yeah, we're anticipating work in the future. It's built into the feasibility work scope that we've tendered and hope to award at the end of Q1 here in advance. So those bidders have brought some very experienced titanium people to the table in their proposals. We've received some amazing proposals and sort of validated our first principles work that there could be something here. So stay tuned on that one, and fingers crossed we've got another hidden gem to daylight here in your evaluation of Spanish Mountain Gold.
Mm-hmm. And one last question. People look at the 600 million fully diluted, of which there's roughly 80 million that are warrants, somewhere between 15 and 24 cents. What's the ownership distribution of this? Is this like thousands of people all just, owning, 100,000 warrants, or is it concentrated in the hands of sort of potential predators who can sit there and play with your market and short into it anytime there's an uptick and basically keep you stuck in a rut? Or
Yeah.
how much of a liability is this
In
overhang?
terms of the overall shares or the warrants?
The warrants.
The warrants, yeah. So, the warrants were part of the last financings as we raised 25 million since 2023 to re-envision and get to where we are. Some of those warrants have exercised. Most of them are in the hands of long shareholders, so we know who they are that participated in our financings. There was some profit taking, that happened in January. It was things like funds rolling up and they had to monetize. It wasn't per se targeted because they didn't believe in the project or whatnot. So I think, yes, we have the warrants out. It was part of what we needed to do to finance. It helped our liquidity. Since the financing that Jason mentioned that closed August of 2025 for 7.2 million. You can see the volumes have gone up tremendously. It was a barrier to entry. So some people are profit taking as good, and the new shareholders coming in that we market to all the time are very long. Some of them are pivoting off of like the Artemises, and we get sought out that you're the next Artemis. I mean, that's some pretty tall order to fill. They've done a great job, but if we can even come close to what they're doing, and I think we got a great shot at it, we can learn from them. So it's served a purpose. There's some warrants coming due. They're 20 cent, I believe, 25 cent in May, June. It's only worth about $2 million. Then there's 18-cent warrants due in November, and then the rest are tied to the feasibility and a long group of shareholders there.
Okay, so even if the holders of these warrants wanted to play games, the nature of this story is such that when people start to believe $3,000 plus is what you should plug into your model, and then take seriously your efforts to upgrade the underlying fundamentals of the project, there's going to be liquidity that will just clean out whatever selling is done against those warrants, and they'll be forced to exercise, and stock will reprice into that 50 cents to dollar cents level, where I think dollar level that it should be.
100%, yeah. And these warrants have been exercising, and that's been giving us cash to accelerate drilling. So yeah, we overachieved under budget our drill program last year, and Jason's continued on. It's over 1,380 meters.
Just under 14,000
Just under 14,000 meters. So that has enabled us to keep going on projects to unlock those key drivers, grade, ore sorting, and the stuff we're doing to prepare for in advance of the feasibility. So we keep our focus on the bricks and mortars of the business, if you will, and that's what's in our control.
I'd like to finish off by saying that in my 40-year career, I have never seen a situation like today where the market is underpricing ounce in the ground gold projects relative to where the gold price is. My entire history has been, oh yeah, we're pricing our projects for the future price of gold. Now we have the opposite, and there's going to be an inflection coming sometime this year where people realize, oh, the market has it wrong. So I'm looking forward to that.
4 million, 5 million ounces, 100 million market cap.
Yeah.
Hugely undervalued. Great opportunity. Can't agree anymore.
So I've been talking to Jason Dunning and Peter Maw of Spanish Mountain in Toronto. Thank you, Peter and Jason.